Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys are having a phenomenal day. It is Monday. We are December the 13th, heading into the last couple of weeks of the year. And one thing I want to talk about in the last couple of weeks of the year is we're going to do something a little bit different in the DMC today because there's just not a lot of great trades from a day trading perspective at the moment as we're waiting on the Fed announcement and what they're going to have to say about the most recent inflationary numbers. And so a couple of very quick things, and then what I want to do today is we're going to spend some time and go through some stock trades. I really, I spend a little bit more time looking for good stock opportunities this time of year, and so we got a couple of stock picks to look at for today. But we will take a real quick look at the markets in general. We're sitting just below this 47.27 potential breakout. We do have a really nice reversal area down in here on the hourly chart. There's even a wick over wick on a 15-minute. We just didn't come anywhere near there last night. And last night, the markets just kind of chopped along sideways. So if we get a little bit of a pullback into this, the origin of this move up, which happened at about 1 to 2 o'clock on Friday, you might get a good little run back into that region. But I like the breakout trade a bit better. Now, it's a little cleaner in the NASDAQ. The NASDAQ breakout above 16,448 is actually a much, much better breakout. Somewhere up above this region, I think, is probably the better way to go. If we do indeed get a pullback on a 15-minute level, you've got a decent, this little pivot area right here where we had a drop base and a very nice strong move away would be the next place to go. Moving over to crude oil. So crude oil on our 4-hour chart, we can see that we are chopping pretty sideways. We do have a potential for a breakdown below 70.39, provided that we get quality basing. Here in the overnights, in the last little while, we've put in actually a pretty nice area of supply up above us, right through here, where we could see a bit of a reversal. Well, this is the better level, no doubt about it. I just don't know that we're going to make it all the way back up to this region here today. We'll see if we get a decent rally back up, but that actually is a decent little reversal area right there, provided we get the move up. And then gold is still telling us to stay away, do not touch, not a whole lot to look at in gold. So really, for today, I think your best setups are this crude oil little reversal point up here, and then the NASDAQ breakout would be the two kind of best setups for our big picture markets for today. Now, this time of year, though, it's really easy to force trades when there's nothing there. And so I thought, let's take some time and go look at a couple of stock opportunities for today in our stock of the day, because that's really where I spend a little bit more time, is more swing trading, maybe long-term investing. So a couple of them, and I'm going to start with SPGI. Now, SPGI is the S&P Global Inc. And so this is not the S&P 500, but I like the potential breakout setup that we have forming right up in here above 476. So a breakout to there would create a brand new all-time high, giving you, a stop down here at the wide stop is 445. You could put your stop just below this most recent basing, but it does look, this morning our spread is 426 by 490, which means we'll probably open up right about where we closed. So that does give you a pretty good opportunity to get involved with this bigger picture move up. So look for SPGI as a pretty good entry. Another one is DIOD. Diodes Inc. So Diodes Inc. I really like the basing that we're getting right in this region. Now, little bit of the fact that we didn't get as big of a pullback down as the rest of the market did, nor did we get as big of a move right back up. So it's kind of stalling a bit. I like it really more by looking at it on a weekly chart. We've come all the way up from $30 a share to $113. Question is, once again, how far can it go? Well, the thing I'm paying most attention to is the increase in earnings, right? 74, 93, 120, 147. So we've seen a momentum in the earnings increases down below. Last quarter, last quarter earnings at this time was 62. So that's a big year-over-year earnings increase. And so will that momentum be able to propel it and continue to go higher? And if we do, we might have a breakout trade up above this 112 region for a pretty decent entry. Now, the next two stocks are all in the same industry group. And the first one would be KLAC, KLA Tenecorp. I've looked at KLAC in the past, and we saw a couple of areas down here that we thought were pretty good for reversals. The market, unfortunately, didn't get close enough to get us an in, but you still also could have a breakout in KLAC above the high. Remember, I'm okay buying all-time highs, right? I'm okay buying a breakout of an all-time high in a stock because oftentimes that's going to allow price to continue to run. You will have to manage your stop accordingly, maybe even have a bit of a wider stop to allow price to come back down. But KLAC does appear to be a decent setup. The other one would be ENTG, Entergis. And looking at this one, we have a little bit of sideways and then potentially a break higher above these highs. So you see very similar price pattern in both of those. Now, looking at something like NVIDIA or KLAC, right? They come from the semiconductor industry, and sometimes it's hard to get into these semiconductor stocks, and you sometimes feel like you've missed them, right? I have a really good friend a couple of years ago who said, this NVIDIA stock is really the one to play, and he was telling me back when it was $30 a share years ago, and I said, we'll get into it eventually. And so one that I think might be worth taking a look at that recently IPO'd is AIP, Arteris Inc. I'm not a huge IPO fan, but it's gone from 15 up to 27 already in its limited release. And so the question is there going to be an opportunity if it does pop above this region where we're starting to see a little bit of basing, right? You sometimes will see that little bit of basing and a little bit of stalling on an IPO before then, boom, popping and going higher. This one does not have options available, so this would be a stock play. But it might be a stock play that's worthwhile, as it is a fairly newly formed low volume security. Doesn't have a tremendous amount of volume, but it could be an early entrance into something that has a chance to pop and run. So I'm not a huge fan of penny stocks. But at $27 a share, you pick up 100 shares of this if you're willing to lose the $2,700, $2,800, and see where the thing goes. I mean, if you do want to do 100 shares or 500 shares, whatever your risk tolerance fits. Now, last stock is a metaverse play, and this one's it's just gotten beaten down recently, just absolutely beaten down. And this is Unity Software. So this one really focuses a lot on the kind of the 3D gaming engines, the reality gaming engines, and so it's had some negative earnings, right? As we look back on the price of this stock, it's had some negative earnings, not really a lot of growth, but it has a potential on the horizon. And so, with the potential that it has on the horizon, is there a possibility, especially as we have pulled back down from 210 to 140 in the last little bit, to see price continue, to reignite and head back higher? I think that it very well could. Once again, this is definitely a speculative play. So this one being a more speculative play does, however, have options. So there are options available, and in those options, now if I pull this up, you're going to see that our implied volatility is, it's not too terrible. I don't know why I'm only getting a little bit of here on the implied volatility. I'm wondering if it's fairly new to having options available. But your implied volatility is not too terrible. And if you wanted to go out a little bit of time and get something like a May option, you can pick up the May 140s. I would do certainly some sort of a spread. These are still fairly high relative to the cost of the option. But you can go out, do a little bit of a spread on this, give yourself all the way out until May to see if we get another pop. Heck, you can even go all the way out to July. It's not that much more to go all the way out to July. Give yourself a little bit more time. Now, this is a longer-term play, so you might want to sell a call up above it. or even sell a put to acquire if you find yourself interested in acquiring the stock. I'm looking at things like the metaverse play. This kind of could be an offshoot, and it's a way to get in on something that's been pounded down. So just something to consider. May not turn into anything, but one of the things that I'm a big fan of is what if I can find a pretty good value on something that before it takes the huge spike higher, right? I think that there is a possibility that if I take a look at our volume, as we spiked up on the original metaverse news, right? That was the big spike up on the original metaverse news. And now as we're coming back down, is that profit taking, right? Is that a lot of profit taking on here that has driven the price back down? And it's probably a more fair price in the 120 to 130 region, but then could it continue to rally a bit higher from there? So you might want to get long if it gets above this 157. That could be a good target for an entry for price to continue to go higher. Wait till you get a higher swing high and a higher swing low, and then see if price can move. So those are some stocks for today. I know that was a little different than what we normally do, but when the markets aren't giving me a whole lot to trade, I want to take a look at some other opportunities. But if you guys have any questions, as always, send me an email, support@tradersarmy.com. I'll talk to you soon, everybody. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.